Hello students. In today's session, let us work out one more problem relating to dissolution of partnership firm. So, I will read out the problem. Shruti, Shilpa and Shreya were partners in a firm sharing profits and losses in the ratio of 2:1. They decided to dissolve the firm. Their balance sheet on the date of dissolution was as follows. Balance sheet is given in the problem. Balance sheet as on 31/3/2018. There are assets as well as liabilities. Assets side, cash at bank 6,000, debtors 30,000, stock 30,000, furniture 22,000, machinery 20,000, buildings 50,000. And on the liability side, creditors 30,000, bills payable 20,000, Shreya's loan 8,000, general reserve 10,000, and capitals of three partners is given, that is Shruti 40,000, Shilpa's capital is 30,000 and Shreya's capital is 20,000, and total of the balance sheet is 1,58,000. Below the balance sheet, they have given some adjustments. The first one is the assets realized as follows. Assets realized nothing but assets sold. Debtors realized 10% less than the book value. Stock realized 15% more than the book value. Buildings realized 60,000. Second adjustment, the furniture was taken over by Shruti at 20,000. Next one is the machinery was taken over by Shilpa at 15,000. Creditors and bills payable were paid off at a discount of 5%. Then cost of dissolution amounted to rupees 1,500. Prepare realization account, partners capital account and bank account. Now, in this problem, there are three partners, Shruti, Shilpa and Shreya, and their profit and loss sharing ratio is 2:1. Now, which are the three accounts you have to prepare here? One is realization account, second one is partners capital account and third one is bank account, because here cash at bank is there. So, you need to prepare bank account. If cash in hand is there, then you have to prepare cash account. Now, let us prepare the format of realization account. Realization account, debit side, credit side, both the side one particulars column and one amount column in rupees, particulars and one amount column in rupees. Now, to prepare realization account, we need to follow the 7 steps. So, let us record the information one by one. Now, when you are preparing realization account, first step is what? We need to transfer all the realizable asset at their book value. To which side? To the debit side of the realization account. Because dissolution of partnerships means what? We are closing the business. So, we need to close the books of account. So, we need to close all the ledger accounts. So, assets account as well as liabilities account. Now, first step in the realization account is to transfer all the realizable asset which can be sold. Those assets we need to transfer to the debit side of realization account. Now, in the problem, let us go to the asset side. Balance sheet, look at the asset side. First one is cash at bank. Now, cash at bank means cash is available in the bank account. So, it is already there in the realized form. So, no need of transferring it to realization account. This cash at bank amount we have to record in the bank account, because we are we have to prepare separate bank account. In that bank account we have to write this cash bank 6,000 as the opening balance. Second asset you can see, that is debtors. Whether debtor is a realizable asset? Yes. Next one is stock. Stock is a realizable asset? Yes. Furniture? Yes. Machinery? Yes. And buildings is also realizable asset. So, except cash at bank here, all other assets, debtors, stock, furniture, machinery, building. So, 5 assets are realizable assets. Because we can realize them, because you can sell them, you need to transfer those assets to the debit side of realization account one by one. So, first one is two debtors, amount 30,000, then to stock 30,000, to furniture 22,000, to machinery 20,000, to buildings 50,000. So, first step to transfer the realizable assets to the debit side of the realization account. Now, second step, after transferring the assets, second step is what? To transfer all the external liabilities or outsider liabilities to the credit side. Liabilities shows credit balance, so you need to record under credit side. Now, let us find out which are the external or outsiders liability. In the liability side, first one you have creditors. Whether creditor is external liability? Yes, firm has to pay that. Bills payable is also external liability. We need to transfer to the realization account. Third one is Shreya's loan. Now, who are the partners here? Shruti, Shilpa and Shreya. Now, Shreya's loan is nothing but partner's loan. Now, in case partner's loan is given in the liability side, what you have to do? We have to settle the partner's loan in the bank account, cash or bank account. Here we have to prepare the bank account. So, we have to directly settle that amount under bank account by paying the amount to the partner. It does not have any impact on the realization. Partner's loan does not have any impact on the realization account. So, we need to directly pay under cash or bank account. Now, here you have to prepare bank account. Next, general reserve. General reserve is also what you need to distribute among the partners under partners capital account. Next one is capitals. Again, capital also where it will go under partners capital account. We have already prepared partners capital account under admission and retirement. Same procedure you have to follow. Capitals, reserves, profit and loss account, everything will go to the partners capital account. We need to distribute among the partners according to their profit and loss sharing ratio. Now, here liabilities, only two external liabilities are there. First one is creditors and second one is bills payable. Shreya's loan, where it will go? Bank account. General is where it will appear? Partners capital account. Capital also it will appear under partners capital account. So, transfer the liabilities now by credit side. Only the external liabilities, creditors. By creditors 30,000. Next, by bills payable. By bills payable 20,000. By bills payable 20,000. So, now from the balance sheet, we have to record the first two steps. We need to transfer first all the realizable assets to the debit side and second all the external or outsiders liability to the credit side. Realizable assets, to find out how many assets the firm can sell, and external liability means outsiders liability. So, firm need to pay the money to the outsiders. After that, after recording all the assets and liabilities, now we have to settle these assets and liabilities. How to settle? All the assets should be realized and all the liabilities should be paid off. Whatever assets are there, because you are closing the business, you have to sell the assets as well as whatever liabilities you need to pay to the outsider, you need to pay after selling the asset. Whatever money you will get from selling the asset, that money you need to utilize for paying the outsiders or external liabilities. Now, let us go to the adjustment and see whatever information is given. First adjustment, the assets realized as follows. Debtors realized 10% less than the book value, stock realized 15% more than the book value, buildings realized 60,000. So, here debtors, stock and buildings are realized. Total how many assets you have transferred? 1, 2, 3, 4, 5. Out of this 5, debtors is realized, then stock is realized and buildings is realized. remaining which and all? Furniture and machinery. So continue reading and find out whether any information is given for furniture and machinery. So you can see there, the furniture was taken over by Shruti 20,000 and the machinery was taken by Shilpa 15,000. So other two assets taken over by the partner, furniture and machinery. Furniture is taken over by Shruti and machinery is taken over by Shilpa. So first we need to record the assets realized, then we need to record the assets taken over. So both are separate entries. Assets realized you need to record separately, then assets taken over you need to record separately. Now when you are transferring the assets, you are transferred to the debit side of realization account. Now from the adjustment, whatever information is relating to the assets, that we have to record under credit side, opposite side you have to record, because by selling the asset the firm will receive money. So it is an income for the firm, so you need to record under credit side. Now by selling, the business will receive what? Money, cash. But whether cash is there or bank is there, here cash at bank is given. So which account you have to write? Cash account or bank account? We have to write bank account. By bank account, bracket you can write assets realized. Assets realized. Under this, write all which are the assets are realized is given in the problem that you need to record. Debtors realized 10% less than the book value. So debtors realized 10% less than the book value. How much is the value of debtors? 30,000. First let us find out how much is 10%. 30,000 into 10% means how much? 3,000. So 3,000 is less. What is the book value of debtors? 30,000. From that how much you have to minus? 10% means 3,000. So how much value you will get by realizing debtors? 27,000. 10% is less means after deducting 10% how much you will get? 27,000. Next one is stock realized 15% more than the book value. Next one is stock. What is the book value of stock? 30,000. So how much you are getting now by selling? 15% more. So let us find out how much is 15%. 30,000 into 15% means it is 4,500. So book value is 30,000. How much more you will get? More means plus 4,500. So total how much you will receive? 34,500. By realizing debtors how much value you will get? 34,500. Next adjustment is what? Buildings realized rupees 60,000. Buildings realized rupees 60,000. Next one is building. Buildings amount is given directly. So buildings 60,000. Buildings 60,000. So buildings amount is given directly. So you have to write direct amount. No calculation here. Now 3 assets are realized. Remaining which channel? Furniture and machinery. For that adjustment is given that the, furniture and machinery both are taken over. So that does not come under assets realized. That you have to record separately. So any other assets is remaining? No. All the assets are settled. Now we need to total the assets realized. 27,000 plus 34,500 plus 60,000. How much you will get? 1,21,500. The total of assets realized is how much? 1,21,500. 1,21,500. So assets realized over. Next information you have to record about assets taken over. What information is given? Furniture is taken over by Shruti 20,000 and machinery was taken over by Shilpa 15,000. So first asset is taken over by Shruti, that is furniture. So you have to write the name of the partner who has taken over. By Shruti's capital account. By Shruti's capital account. How much? 20,000. Bracket mention which asset is taken over. That is furniture. Furniture taken over. Next one is Machinery was taken over by Shilpa at rupees 15,000. So, write by Shilpa's capital account. Shilpa's capital account. Amount is 15,000. Bracket write machinery taken over. Machinery taken over. Now just check whether this all 5 assets are settled here. Yes, 1, 2, 3, 4, 5. And in this problem they are not given any information about unrecorded assets. If any unrecorded assets information is given, that also you have to record here. Unrecorded means assets which are not given in the balance sheet. Now such information is not there in this problem. So assets are realized. After realized and taken over, you have settled all the asset. After settling the asset, next step is what? You have to pay the liabilities. How many external liabilities are there? Creditors and bills payable. So in the problem, what information is given? Creditors and bills payable were paid off at a discount of 5%. So creditors and bills payable are paid at discount of 5%. Now which side you have recorded? Creditors and bills payable. You have recorded under credit side. Now you have to pay. When you are paying, it is an expense, so it will go to the debit side. When you are paying, how you will pay? By cash. But whether your cash is there or bank is there. So cash, bank is given. So which account you have to take? Bank account. Bank account. Why you are passing this entry? For liabilities paid. Liabilities paid. Bank account, that is liabilities paid. What is given? Creditors and bills payable paid off a discount of 5%. First one is creditors. How much is the value of creditors? 30,000. Whether you are paying full amount? No. Your business partnership firm is getting a 5% discount. Let us calculate how much is that discount. So what is the book value of creditors? 30,000 into 5% means how much? 1,500. So how much you have to pay? 30,000. But you are getting 5% discount means how much? 1,500. Discount means whether you are paying, whether you will pay, no. So 30,000 discount is minus 1,500. That means how much amount to creditors? 28,500. Firm has to pay 28,500 to the creditors. 30,000 is the book value of creditors. How much discount you are getting? 5%. Means how much? 1,500 is the discount. From the 30,000 you need to minus 1,500. So that means how much amount you have to pay? 28,500. Same way for bills payable. How much is the bills payable value? 20,000. So for bills payable also there is a discount of 5%. So let us calculate 20,000 into 5%. How much it is? 1,000. So from 20,000 you are getting 1,000 discount. That means how much bills payable amount you are paying? 19,000. How much? 19,000. 20,000 minus 1,000. Now both the liabilities are paid. Now let us total it. How much is the total liabilities paid now? 28,500 plus 19,000. 28,500 plus 19,000. So how much it is? 47,500. Total liabilities amount is paid is how much? 47,500. 47,500. So you have settled all the assets as well as settled all the liabilities. Finally, you need to record the expenses of dissolution or realization expenses. For carrying out the formalities of dissolution, that is selling the assets as well as paying the liabilities, firm need to pay certain expenses called as dissolution expenses or realization expenses. Now, is there any information regarding that? Yes, they have given cost of dissolution amounted rupees 1,500. The cost of dissolution is nothing but dissolution expenses. Say they will give different things. Sometimes they will give dissolution expenses, sometimes it will be realization expenses will be given, sometimes cost of dissolution will be given. It is one and the same. That is nothing but dissolution expenses paid by the firm. Expenses means which side you have to record? Debit side. Now again you have to pay means cash or bank account. Here which account you have to take? Bank account is there. So you have to write bank account. How much the cost of dissolution is given? 1500. How much is given? 1500. So to bank account 1500. That is nothing but cost of dissolution or dissolution expenses. Dissolution expenses. Now in this problem they are not given who has paid the dissolution expenses. It is understood that firm has paid the dissolution expenses. If partner has paid, it will be clearly mentioned which partner has paid the dissolution or realization expenses. So otherwise you have to assume that it is paid by the firm only. So you have to write it as to bank account. Now we have recorded all the information under realization account. Now we have to total and balance. You need to see which side is more, whether debit side total is more or credit side total is more. So we have to total both the side. So debit side when you total how much you will get? 30,000 plus 30,000 plus 22,000 plus 20,000 plus 50,000 plus 47,500 plus 1,500. 2,01,000. When you add credit side, how much you will get? 30,000 plus 20,000 plus 1,21,500 plus 20,000 plus 15,000. You will get 2,06,500. So which side total is more? Credit side total is more than the debit side. Credit side total is more than the debit side. Now if credit side is more than the debit side, it is nothing but profit. Means income is more than the expenses. Income is more than the expenses. If it is debit side is more than the credit side, then it is what it is? Expense is more than the income. So it is a loss. In this problem you are getting credit side is more. That is the first one. Credit side total is more than the debit side. Then it is called as what? Profit on realization. Let us find out the amount. First let us write the total. Which side is more? Credit side is more. So how much is total? 2,06,500. So if credit side is more means balance will go to which side? Debit side of the account. So in order to write the balance, leave 4 to 5 lines, then write the total. Debit side leave 4 to 5 lines to write the balancing amount, then write the total. 2,06,500. 2,06,500. Same total now we have to record under debit side also. Same total we need to record under debit side. 2,06,500. 2,06,500. Now from this 2,06,500 we need to minus all the debit side amount, that is 2,01,000. 2,01,000. So 2,06,500 minus 2,01,000, that is debit side total. So how much balance will get? 5,500. So that 5,500 is nothing but profit on realization. So what you have to do, this profit amount we need to distribute among the partners. You are closing the business, so you have to distribute that amount among the partners according to their profit and loss sharing ratio. So debit side you have to write to partners capital account. To partners capital accounts. Who are the partners? Name you write Shruti, Shilpa, Shreya. So you have to specify Shruti, Shilpa, Shreya. So how much is the balance amount? Profit amount 5,500. Right in front of all the partners 5,500. How to distribute? According to the profit and loss sharing ratio. How much is the profit and loss sharing ratio? Shruti, Shilpa and Shreya were partners in a firm, sharing profit and loss in the ratio of 2:2:1. 2 plus 2 plus 1. So that is 2:2:1. So total is how much? 2 plus 2 plus 1 means 5. Total share is 5. Now first partner how much is getting? 2/5. 5. First partner is getting 2 by 5. So 5,500 into 2 by 5. How much is the amount? 2,200. 2,200. Next partner also 5,500 into 2 by 5. 2,200 only. See, second partner also 2 by 5. Last partner is 1 by 5. Shreya, it is 5,500 into 1 by 5. So it is nothing but 1,100. So when you add all these three amounts, 2,200 plus 2,200 plus 1,100, you should get the balancing figure. How much is that? 5,500. 5,500. Now this amount is nothing but profit amount. Profit on realization. 5,500 is nothing but profit made on realizing the assets and paying the liabilities. After assets are realized and liabilities are paid, firm is getting a profit of how much? 5,500, and it is distributed among the partners according to their profit and loss sharing ratio. So now we have completed the realization account. After preparing the realization account, which is the next account you have to prepare? You have to prepare the second account called as partners capital account. Which is the second account you have to prepare? Partners capital account. Now in this problem, how many partners are there? 3 partners, Shruti, Shilpa and Shreya. So format of partners capital account. Partners capital account. Partners capital account also has the debit side and credit side. So how many amount column you have to prepare? Depending upon the partners. In this problem, how many partners are there? 3 partners. So you have to prepare 3 accounts. 3 amount columns, not accounts, 3 amount column. Particulars, Shruti, first partner's name, Shruti, rupees. Second one is Shilpa, and third one is Shreya. Same under credit side also. Particulars, Shruti, Shilpa, Shreya. Shruti, Shilpa and Shreya. Now, when preparing partners capital account, first information you have to record about what? Capital of the partner. So where you will find this information? In the balance sheet. So in the balance sheet, liability side they have given the capital. Shruti 40,000, Shilpa 30,000, Shreya 20,000. Now capital is a part of liability and capital shows which balance? Credit balance. So opening balance, you have to write it as opening balance. And how to write the opening balance? By balance brought down. By balance brought down. 40,000, 30,000, 20,000. 40,000, 30,000 and 20,000. By balance brought down. 40,000, 30,000 and 20,000. After that, already which account you have prepared? Realization account you have prepared. And the balance in the realization account, we have transferred to which account? Partners capital account. We have distributed among the partners. Total balance how much got? 5,500. And you have distributed among the partners according to their profit and loss sharing ratio. So, and that 5,500 is nothing but which amount? Profit made on realization. Now this, because you have distributed this amount to the partners, now you have to transfer this information to the partners capital account. Now in the realization account, which side you have written? Debit side you have written partners capital account. Now we need to transfer this amount to the partners capital account. When you are transferring, which side it will go? opposite side of the account. From the debit side, it will go to the credit side. From which account you are transferring? Realization account. By realization account. By realization account. How much is each partner's share? It is 2,200, 2,200 and 1,100. 2,200, 2,200 and 1,100. After that, you need to record the reserve and undistributed profit or loss, which is given in the balance sheet. So, go to the balance sheet and find out any reserve or undistributed profit or loss is given. That is nothing but profit and loss account. If profit and loss account given in the asset side, then it is undistributed loss. If it is given under liability side, then it is called as undistributed profit. Now, let us say general liability side, you can find general reserve 10,000. So, that you distribute among the partners according to the profit and loss sharing ratio. Profit and loss account is not given in this problem. So, no recording. So, if it is given, then only you have to record. Only general reserve is there. Now, general reserve is a reserve which is created by the firm for future use. Means out of the profit, the portion of the money is kept aside to use in the future for unknown contingencies or liabilities. Now, because it is there on the liability side and because it is a part of profit, you need to record and you have to distribute among the partners according to the profit and loss sharing ratio, and you have to record under credit side of partners capital by general reserve account. How much is the general reserve amount is given? 10,000. How much is the ratio? 2:1. So, 10,000 into 2 by 5, first partner 4,000, 10,000 again second partner also 10,000 into 2 by 5, 4,000, and last partner 10,000 into 1 by 5, it is 2,000. Liability side is the liability shows a credit balance, so you need to transfer the general reserve to the liability side of the partner's capital account. Next, profit and loss account is not given in this problem, so no recording. After that, you have to go to the realization account and you have to see anywhere partner's name is written. For assets taken over and for liabilities taken over, you will write the partner's name. So, just check in the problem whether any where partner's name is given, whether you have written. Debit side, there is no partner's name, only that profit was there, that already we have transferred. Credit side, anywhere partner's name is written, yes. Shruti's capital account and Shilpa's capital account. For what you have recorded partner's name? For assets taken over. Shruti has taken over furniture and Shilpa has taken over machinery. So, because this is relating to the partners, we need to transfer this information to the partner's capital account. Now, in realization account, which side you have recorded? Credit side. Now, when you are transferring to partner's capital account, which side you have to record? Debit side, opposite side. From which account you are transferring? Realization account to realization account, to realization account. Now, whether all three partners name is there? No, only two partners is there. Only two partners has taken over the assets. Shruti 20,000 and Shilpa 15,000. So, write Shruti's column 20,000 and Shilpa's column 15,000. Shreyas column nil. Now, this is for what? Assets taken over. Assets taken over by the partner. So, this entry for assets taken over. So, Shruti has taken over furniture 20,000 and Shilpa has taken over 15,000. Here credit side is there. When you are transferring to partner's capital account, which side it will go? Debit side. Now, after this we need to total and balance the partner's capital account. So, let us see which side is more, whether debit side total is more or credit side total is more. So, here 40,000 is there, here only 20,000. So, Shilpa it is credit side total is only more. So, 40,000 plus 2,200 plus 4,000. How much is the total? 46,200. 46,200. Same total right under debit side also, 46,200. Now find out the balance. 46,200 minus 20,000. How much balance you'll get? 26,200. 26,200. So Shruti's capital account here settled. Now go to the second partner, Shilpa. Total Shilpa's column, debit side how much is there? 15, only 15,000. Credit side is more. There is 30,000 plus 2,200 plus 4,000. So it is 36,200. Total of Shilpa is how much? 36,200. Write the total debit side also. Now minus the debit side amount. That is 36,200 minus 15,000. How much will get? 21,200. After minusing, how much amount will get? 21,200. Now balance last partners column, Shreya. Debit side 0, credit side is more, that is 20,000 plus 1,100 plus 2,000, that is 23,100. 23,100 minus 0, that means balance is how much? 23,100 only. So all three partners account you are balanced, and how much balance you are getting? For Shruti it is 26,200, for Shilpa it is 21,200, and for Shreya it is 23,100. Now because you are closing the business, now you need to close the partner's capital account also. We have to close the partner's capital account. Now if partner's capital account shows credit balance, that is if credit side is more than the debit side, then their account shows a surplus balance. This is a surplus amount. In case if debit side is more means, then it is called as deficit balance. Debit balance means deficit balance, credit balance means surplus balance. Now in this problem we got credit side more. So this balance is called as what? Surplus balance. Means partners will receive money from the business, from the partnership firm. How much Shruti will receive? 26,200, Shilpa 21,200 and Shreya 23,100. How you have to settle? Because they have to receive, firm has to pay. So by paying the amount to the partners. So which account you have to write? To bank account, because here cash at bank is there. So you have to write bank account. Bank account. By paying the amount to the partners, you need to settle their account, means close their account. This is final balance paid. Final balance paid. Final balance paid. No writing to balance carried on, because we are not continuing the business here. We are closing the business. So we need to close the partner's capital account also. How we have to close the partner's capital account? By paying the amount to the partners. Now finally, you have to prepare which account now? Last account, bank account. To record all the information about the cash, how much cash is paid and how much cash is received. Same way, debit as well as credit. One particulars column and one rupees column. Particulars and rupees. Particulars and rupees. Particulars rupees, particulars rupees. Now bank account. Bank is an asset. Asset shows which balance? Debit balance. So first we need to record the opening balance of bank. Go to the asset side of the balance sheet. How much the bank amount is given? Cash at bank 6,000. Cash at bank 6,000. So bank is asset. So debit side you try the opening balance. To balance brought down. To balance brought down. How much is given? 6,000. 6,000. To balance brought down is 6,000. Now after recording the opening balance, then we need to record all the bank's transaction. Whatever you have done, whatever bank transaction you have done, that you need to record. So how we will find out that? By going to the previous account. Which are the previous account you have prepared? Realization account and partners capital account. Now first let us go to the realization account. realization account. Go to the debit side, find whether you written bank. Yes, there is bank. One is for liabilities paid and one more bank is there, that is for dissolution expenses. Now here you have paid the amount and you record under debit side. Now this, because it is relating to bank, we need to transfer it to the bank account. We have to transfer it to bank account. Here which side you have written? Debit side. Now which side you have to transfer? Credit side of bank account, opposite side. First one is for what? Liabilities paid. How much is total? 47,500. Second one is for dissolution expenses. How much is 1,500? But when you are writing, you have to write the name of the account from which account you are transferring. Now which account you are transferring? Realization account. So write by realization account. By realization account. How much is that? First one, 47,500. That is liabilities paid. Liabilities paid. 47,500. Next one is for what? Dissolution expenses. That is 1,500. So from which account you are transferring? Realization account. By realization account. Dissolution expenses or cost of dissolution, one and the same. How much it is? 1,500. 1,500. Now debit side is over. Come to credit side. Whether you return bank? Yes. For what? Assets realized. How much is the total? 1,21,500. Again, this is the information related to bank, so we have to transfer to the bank account. From which side you are written here? In the realization account we are written credit side. When you are transferring to bank account, which side it will go? Debit side. 2. From which account you are transferring now amount? From realization account. So you have to write to realization account. To realization account. 1,21,500. 1,21,500. That is assets realized. Assets realized. So from the realization account, all bank transaction you are transferred to the bank account. Now second account is which account? Partners capital account. Now partners capital account also you have settled by paying the amount to the partner through check, that is to bank account. So how much is their balance? 26,200, 21,200, 23,100. Now before writing this amount, before transferring this amount to the bank account, we need to find out one important thing is partners loan, whether partners loan is given in the problem. Whether, who are the partners here? Shruti, Shilpa and Shreya. Go to the balance sheet in the problem. Any partner's claim is given, whether Shruti's loan, Shilpa's loan or Shreya's loan, anyone is given. Yes, in the liability side you can find Shreya's loan is 8,000. Partner's loan, it is a partner's loan. Shreya's loan is a partner loan. So which side it is there? Liability side. So we need to pay. So which side? It is credit side. By liability shows a credit one by Shreya's loan account. Shreya's loan account. By Shreya's loan account. How much is this Shreya's loan? 8,000. Shreya's loan is 8,000. Shreya's loan is 8,000. Now go to the partners capital account and record their final balance, whatever you are transferred to bank account. So here which side you are written? In the partners capital account bank, debit side. Now when you are transferring to bank, which side it will go? Credit side. Write each partner's name. By Shruti's capital account. Shruti's capital account. How much amount to be paid to the Shruti? 26,200. Then Shilpa is how much? 21,200. By Shilpa's capital account, 21,200. 21,200. Next, last one is Shreya. By Shreya's capital account, 23,100. Shreya's capital account, 23,100. 23,100. So now you have recorded all the information under bank account. See, debit side means how much cash is available. One is opening balance, how much you have 6,000. Then by selling the assets, how much amount you have collected? 1,21,500. So now total, how much total cash is that is in the bank? 1,27,500. 1,21,500. Now this 1,27,500 you have to utilize for paying what? Liabilities and dissolution expenses and paying partners loan as well as paying the final balance to the partners. So how much liabilities you have paid? 47,500. How much dissolution expenses you have paid? 1,500. How much Shreyas loan amount you have to be paid? 8,000. Then each partner's account shows how much balance. Shruti 26,200, Shilpa 21,200 and Shreya 23,100. So how much total you are getting now? So firm has paid also how much? Full 1,27,500. 1,21,500. So ultimately bank account should tally, because you are closing the business. Here you need to settle all the accounts, even bank account also. Bank account also should not show any balance. If you are getting any balance, then a problem is wrong. So here how much cash you had? Cash at bank, that is 1,27,500. The full 1,27,500. How you have adjusted? One is by paying liabilities, one is paying dissolution expenses, by paying Shreya's loan and by paying the amount to the partners. So full 1,27,500 is paid. So like this we need to prepare all three accounts: realization account, partners capital account and bank account for 12 marks. So we have finished this problem. In the next class, let us work out other problem.